space. So this theme talks about really how fintech companies and financial service providers need to put their hands together and partner in a concerted effort that allows us to build financial service providers or institutions that are forward-looking, future-oriented, and like the theme of this conference says, next generation microfinance institutions. So we expect from this lively panel discussion to talk about what are going to be the practical strategy considerations for financial service providers when they are considering partnering with fintech companies, financial technology companies, and what are some of the potential outcomes they can also anticipate. So we're going to talk about what's going to be the strategy consideration and what's also going to be the modality of partnership and engagement between these technology companies and the financial institutions in terms of providing basic financial services, whether be it lending, saving, insurance, or payment, broadly looking at the broad spectrum of financial service that entails the engagement or the transaction between financial service providers and the target market that they're working on. So one of the key outcome of this panel is going to be also take away some actionable recommendations that will help financial service providers to scale their capacity in terms of digital innovations. Sectoral collaboration can also be fostered in a partnership modality and forward-looking vision, and how the Ethiopian microfinance sector can be strengthened through these partnerships in terms of the capacity that it needs to have. And all of this is going to culminate toward this how financial service providers can better outreach to the target segments and can also provide the needed services in a more efficient and digitally enabled manner. I'm happy to see Mr. Tafa Usawork is now joining us. Allow me, kindly help me welcome him to the stage. So with that said, I would like to start with the first set of questions to our fintech service provider in the ecosystem, Premier Switch Solution. And I want to start by asking how Premier Switch Solution has leveraged the partnership it has with financial service providers and also other broadly speaking, service providers in the market, including telecoms and other digital financial service technology providers, vendors, and what have you. If you could give us a bit of background and history into that, and what are some of the challenges that you have gone across in terms of this partnership with financial institutions, and how you manage to integrate sector-specific solutions beyond sticking to urban-centered target market, but going into economic sectors like agriculture, e-commerce. And the last point would be, whenever we talk about technology, one thing always comes to mind: network and security. And have you, as a fintech company, ensured proof against cybersecurity risks, fraud, and how do you also maintain regulatory compliance? So allow me to start with that. Mr. Youssef, the floor is yours.
Thank you. Good morning, everyone. I thank you for the arranging this session, the organizers. With regard to the questions raised in this session, we can see different with regard to the technology partnership and the MFIs and fintech partnership, we can see in two ways. One is from MFI perspective, it's already a business established. They have different kinds of expertise in mobilizing funds, whether it is saving or credit. They have their own, well-experienced business established, and also they have a loyalty by their customers. So they have also they are compliant with the regulators. This is a well-established business. When it comes to the fintech, it is an emerging business where we don't have a lot of customers. The fintech companies usually, they are not much customer base comparing to the others. So we are really focusing on technology, but our core strength is on innovations. We have a background of technology and we have an expertise of technology. So we innovate always a product which can fit to the market. So that's our strength. We can say the mobile payment, the digital platform, the digital payments is an emerging business where we can collaborate, we can work with MFIs. So this is our core strength. So leveraging the main business to get the main business, okay, the high customer base part. So one of our core strengths is being innovative, but we don't have a very good customer base. We don't have very much companies since we are established in recent years. So we might get a better opportunity by making a partnership with MFIs. So how we can partner with that? There's a digital convergence. How? One is the main digital convergence or infrastructure is digital ID, the digital platform. When you say a digital platform, it might be a payment infrastructure, whether it is mobile app or super app or the switch card system. So many kinds of payment ecosystem can be one of the digital convergence in which we are looking for all financial MFI banks, and also particularly for MFIs, they are big customer base in the rural areas. Compare the infrastructure on the rural areas and the cities, it's very difficult to get the convenient infrastructure at the rural area. So one of the best way is to use mobile payments. To access their customer, a fintech company is required. A mobile operator is required. So instead of investing any technology business there, bringing a new skill to their company, it's better to partner and create a digital convergence together to access their market, to serve their market. So the other thing is about one of the expertise of the MFIs are credit. They do a credit business. For that credit business, currently, giving a credit in the normal traditional way, it will be taking a month. So that will impact the customer. Will not the main satisfy the customer. So having a credit scoring or a digital lending using the fintech companies is one of the way of partnering or way of reaching to their customers. So this is one way of digital convergence. The other thing is AI. These days, AI implemented can be in any systems, can be embedded in any system, whether it is in the payments, whether it's in the data analytics, whether it's in credit scoring, whether it is different kinds of reports. It can be embedded in the system. So this will help the MFIs, instead of establishing by their own, Partnering with fintech is to be very simple because mutually they can be benefit and they can create a digital convergency for the ecosystem, for the community. So this is the way to partner with them. This we can say this innovative partnership. We innovate technology, they innovate their businesses, so we can partner together because our weaknesses can be supported by their strengths. Our strengths can support them to do their businesses. So this is one way of we can say a digital convergency. So for this, the benefits from MFIs is lower operational cost. It lowers their operational cost. It's also time to market. The time to market for by partnership, there will be it's already invested business, already supported business, so they can go immediately to the market and wider customer reach. They can reach wide population, wide community of their customers. So this way, one, they can benefit from the fintech perspective. Also, we can comply the regulatory immediately, sooner, because they are already licensed company. They are licensed, so there is no issue to be to require any licensing. We can have a back-to-back contract agreement with them, so we can be comply the regulatory, and also we can also secure large customer base. One of the revenue we are getting as a fintech company is transaction, mainly on transaction on onboarding fees, mainly the transaction fee. The larger the volume of the transaction, we can get a better revenue to sustain our market, to sustain our innovations, to sustain bring to the market. So with regard to the challenge raised about security, that is, the normal scenario which we are going to follow for any technology when we are implementing. Security is a DNA. It should be embedded. Without having the security, it's very difficult to do a business. Today, for each and every business, security breach is a day-to-day norm. So one of the strategy we are following is that to comply with the national security certifications given by INSA, one. Second one is international compliance, which is PCI DSS certifications. We are also doing such kind, even if it requires a big investment, we are passing through that journey. So we secured different kinds of certification from international as well as. So this will bring for every company trustworthy. For any business, security is main issue. So even if it is a challenge, it can be managed through different kinds of process by implementing different kinds of security checkpoints. That's possible. That is from my side. I thank you.
Thank you, Yusuf, for giving us that run through of the process that involves in terms of fintechs and financial service providers partnering. And I think that gave us a very good idea of what the initial stages of building partnership looks like. He mentioned that because financial services have been there in the market for quite a significant amount of time, decades, and fintech companies, to the most part, are quite new. And there is trust issue that comes into play in terms of building that partnership. But I think the message is you should start trusting fintech companies because we have advantages to you, is what I have captured, which is will bring about efficiency, will help you expand your outreach, and will also help you with insights that the data can generate in terms of allowing you to provide a more efficient financial service mixes. But he also mentioned that security concern-wise, related to cybersecurity challenges, fraud, and the others, we are there to help you is the message that I've also captured from his take. But now let's come to the financial service provider in the panel with us. Unfortunately, we don't have a microfinance panel, but we have a bank representative. I know Tafesa is working with Bunna Bank, and sort of similar questions in terms of financial service providers building partnership with fintech companies. What are some of the leverages the financial service providers should look for? And if you have faced some challenges in terms of building such partnerships and relationship, what are some of these challenges, and how have you as a financial service provider navigated those challenges? And issues related to cybersecurity, regulatory compliance, how has this partnership with fintech companies helped your service provisioning?
Thank you. First, let me ask your apology because that is a gate to get visa to enter to here, so that's why. Before getting into the depths of partnership, why we partner with fintech is important because always we should have to seek values from while partnering with some other guys or company, we should have to know our values, why we partner with fintechs. So as a financial service provider, especially as a microfinance institution, we may be established as with a capital to lend some money to those who may not get access for financial services. That may be bottom of the pyramid. But until today, most of our microfinance institutions may seek security or guarantee for what they lend to these societies. So in this process of lending, it may take too much as well. We may not get funds as we expected. That may be tough for us. Instead, it is better to partner with a fintech or financial service provider that may be provide a special product for us is important for us. So while partnering with fintech, why we partner with fintech? Because it is important to know for all of us. Because as a financial service provider, we may not partner for everything. Instead, what we miss in while providing our financial services. So, in addition to that, traditionally we may be engaged in collecting money from the public as well. We may lend this money for the public, but that may not be profitable because the current business shows that despite the financial service provider, which is known traditionally, may be by mobile money providers. So, process, unless we partner with technology providers or financial service providers, we may not reach these customers as we expected to get the required return from our investment. So, in partnership, what makes the partnership for us? It's automate or digitize our customer onboarding process and as well our lending process that enhance our capability to reach the bottom and as well that may eliminate the security or the guarantee processes which traditionally capturing a lot of document in our office. So digital business will not be managed only by as a company, because rather we should have to seek professionals, we should have to seek capabilities from our partners. So partnership should have to be evaluated based on value. So as a microfinance industry, we should have to capture the current situation we are running in service providing, because this financial service highly disrupted by a fintech company and as well financial service provider which had been getting license through following instrument issuer directive. So having this, while partnering with a fintech, we should have to define values and where do we meet our targets. What was our purpose to partner with one fintech company or others? So unless we define perfectly at initial stage, that may be means of conflict and later, because we don't know what will happen after a year, after 6 months, after 2 years, because the business will be booms out and everybody will look at our performance. So in that case, the company also may not found that initially what he proposed to us. So initially we should have to agree on pricing. We should have to agree on the support and the SLAs that should have to be incorporated in our agreement. That is important. The security part and the challenge is important. So my colleague Joseph clearly mentions that every partnership should have to be followed through the process which has been provided by NEB and as well INSA, which certifies, initially which is developed locally has been certified by INSA. So we believe that once the INSA issue a certification, we believe that the security will not be at this stage. We don't know what will happen in the future. Until partner, at the time of partnership, we believe that the security will be confirmed by INSA. We don't know. Following, there is also a development in technology, will happen something after that. So partnership with fintech is still important. We have to look at the value, what gives to us, because instead of partnering with different companies, we should have to select. And as well, while partnering with a fintech, we should have to segment our customers, our product, and value is also important. So that is the main thing while partnering with fintech companies. The other and the critical thing as a challenge, the contract management as well. Who's going to be liable while launching the product? The sales will belong to us or the fintech company. So we should have to clear for that. Because if you are not defined such process, the fintech company may wait until its contract period or something like that. The sales will belong to us. So that's also important. So product by itself may not be reached to the customer unless properly marketed. Describe the value for the user. That may be the important things to be mentioned while partnering with the fintech. Thank you.
Thank you, Professor. I think again, what has been reconfirmed by the financial service provider is that there is much to be leveraged when we are considering partnership with a fintech company. And as a bank, he's giving us witness of how such partnerships has helped the bank is working for as a financial service provider to improve on some of the products and services mix that they're offering to their clients. But also hoping Professor will give us some examples and evidences from practical partnerships that the bank currently has. And I want to ask a follow-up question to Professor, because I know Buna Bank is one of the leading digital lending service providers in the market. They have this platform called ABOL, and I know in ABOL they have managed to reach out to tens of thousands of MSMEs, having dispersed a significant amount. But I also know that quite recently they have started lending to the agriculture sector. And this portfolio has also grown quite significantly at Buna Bank. So if you don't mind, if you can give us a bit of insight into this partnership that you currently have and how you are, as a bank, have managed into the digital lending space through the ABOL platform.
Thank you. So our partnership with ABOL is a great opportunity for us, which help us to reach most of the reached by in a traditional banking, because in traditional banking still we were in asking a collateral, so we not be reach these customers. While introducing ABOL, it's also help us to reach most, and as well this digital lending may not be, because still we are not yet maximizing ABOL, because still diversifying a product for different groups of customer, and as well recently we start to provide agri lending to some of the societies, but still there is a potential to diversify the product. But this is agricultural lending. It's at initial stage, not yet ready to publicly disclose that we perform, but there is an opportunity to extend this product more. But still, there is an opportunity, or we may not see yet, while delivering this agricultural loan to farmers, still we are not yet embedded with some additional services. So we are still focusing on SME, yes, but while using this loan, there is a potential to provide this loan to householders in urban areas, like those who paid for utility, those who paid for electricity, those who paid for schools, and others. We should have to provide as an embedded ones with the finance, so to increase the availability and as well the customer base. For agricultural, we are on initial stage. We are not yet to publicly promote as or we do that, but still we are working on it and hope in the future we may be one of the digital provider farmers. But apart from this, there is also an experience from abroad while using a microfinance. This digital lending has been provided for farmers using or creating some sort of group of society in some areas, maybe women's association or some of elders association. Just creating such kinds of association depends on the association. A microfinance may provide digital lending for them based on their contribution or something like that. There may be potential for microfinance because you already have the segment, you already have the access to reach this population. So you can create. Let's say you may create a coffee association in some farmers area. Okay, those who have access for the farmers. Those who run in urban areas, you may have access to schools, access to utilities, or access to dirt, access to coop. You may have a chance to create such digitals for those who engage in urban areas, microfinance. As a bank, we may, as we established more than 400 branches, more than 5 millions of customers, still a potential to extend the facilities to this all groups of society. But as a microfinance, we may not worry about the numbers. We may not worry about the size. Instead, we should have to focus on our areas of engagement that will give us a potential to utilize the digital lending. Thank you.
Thank you, Professor, for those insights. I don't know if many of you recall the keynote speech provided by Mr. Mawira on day one of this session. Mr. Mawira from IFAD. I quote, and he said, for the next generation of microfinance, digital and use of data is a must. Without that, I don't think we can think about the future. And this brings me to a memory also, where some 15 years ago, I would say in 2010-11, I remember where the National Bank was mandating financial institutions to implement core banking solutions. It was only done because it was mandated. And at the time, the financial service providers did not see the need for core banking solutions. But in 2026, can we really imagine our life without banks having core banking solutions and without the current digital infrastructures that we're happily leveraging, particularly in the payment space? And this is the kind of foresight and forward-looking that we need in terms of improving financial service provisioning at a microfinance stage. We need to have the vision that it's only through digital and data-driven lending, saving, and also payment services that the next generation of microfinance will be realized. Having made that note, I would like to pass to the next panelist, Mr. Ndeshau. You have heard about the innovative partnership, both from a financial service provider side and also from a fintech company side. Now, putting those two together, what would you say would be the future for such innovative partnership, and where do you see digital convergence having a dent or an impact in the financial service provision in the microfinance space going forward?
Thank you, Kantha. Good morning, everyone. I think the theme of this conference says it all, which is next generation of microfinance, right? Like if we're talking about that, there are a lot of things that we need to achieve in a short period of time, because there is a heavy challenge of being left behind in this digital era. So looking into that, like both from the service providers, one a financial institution, and also from the payment system offered by the National Bank of Ethiopia. I think fintech is a good new term that we're happy about of using, but every one of them are lump summed as digital financial services in the Ethiopian regulation. So from that perspective, I think, and I believe that microfinance institutions can leap forward in building partnerships with in mind of the last mile in the goal in it. I think we've talked about earlier with even the two panelists, specifically about the processes. We usually worry about how we are going to achieve that here and that. But I think there is a specific word managers usually love to use, especially in the private sector, which is go ahead and get it done or figure it. Howsoever you're doing it, just figure it out. But what we need to look at is what is the end goal we have in mind? Is it sustaining our microfinance? Is it being valuable, or is it being preferred institution for the clients that we are serving? Microfinances are taken as institutions that can actually make a difference at the last mile, at the grassroots level, engaging directly at the household level. I have in the past a direct work experience as a fintech company working closely with microfinance institutions. I've traveled through dusty roads in rural part of the country at someone's house, an MFI providing financial service at the doorstep of an individual client. So that happened because of a partnership that's formed between a fintech company or a digital financial service company and a microfinance institution. So partnership is everything, and it's not something that we should be shying away from. Nowadays, what is happening in the rest of the world is that everyone is closing up their branch networks. They are minimizing them by mass. But if you look at ourselves, for example, if you look at Ethiopia, we are opening up new branches every now and then, while there are diverse solutions that can actually help us solve our daily challenges. We can look at the heavy challenge we face on operation, on leakage that we face, or how we can build transparency and trust with our, even providing a better service to our clients and be competitive in the market. In forging partnership, we should not limit ourselves with either one client, one partner, but we should have as much partners as possible to deliver our services. For example, in adapting technology, in early days, everyone was talking about building their own data centers. While there are actually experts Her day-to-day job is to manage a data center. Banks, microfinance institutions, and since we are speaking about microfinance institutions, they are not built for it. There are tech companies that can actually take care of that. And even in business, it is much better to pay rent rather than own a building and pay additional expenses on it, or include even managing it. Yes, it might come with its own perks, but that's not the purpose why such kind of institutions are evolving. So if we want to build the next generation of microfinance institutions, if we do not want to be left behind, partnering with fintechs, techfins, technology companies, or even service providing institutions for outsourced services is a best way to move forward. Like specifically, for example, if you look at National Bank's payment instrument issuer or the use of agents directive or even payment system operators directive, it specifically allows to partner with service providers that come services for financial institutions. So with that said, I think and I believe that institutions can even with partnership solve in their challenges in digitizing their day-to-day operations, be it in an offline or online structure. Even the partnership that which I commend Amphi have commented on and most microfinance institutions are utilizing is the shared core banking system being implemented on the ground can be used as a tool which can enhance productivity across the board, allowing clients directly to use their own mobile phones to conduct transactions. Furthermore, even for example, rather than moving directly in client's house or even location or businesses, if we to utilize mobile money agent networks or e-money issuer on the ground, it will give a way where operational costs will be minimized and the rest of the money can be invested in another place where it can increase productivity. So with this, I believe MFIs partnering with fintechs, be it for digitizing their own productivity, day-to-day activities, or even provide new value proposition for clients. It is a new way because now data is what? The new collateral, right? It's not what you have, but data is becoming huge, and financial institutions, finances with a larger client base that they have, they can utilize this to come up with different products and value propositions for their clients. Over to you, Kam.
Thank you, Indashal, for those insights. And if I am to summarize, I hear a question in his remarks. And the question is, if you are a microfinance institution and you're not digital, if you are a microfinance institution and you don't have a fintech partner, the question is, what are you doing? What do you see for yourself in the future? This is something I think I want every microfinance practitioner in this room should take away as a keynote. Now, the points that have been mentioned are all showing us a rosy picture. Digital is the way to go, digital partnerships, and there's a sense of urgency as well. And we need to act now. But then, like the saying goes, to move fast, you need to also slow down. And you need to look at working on. And this brings me nicely to the next set of questions that I have. Because as microfinance practitioners, we all have social responsibility and social objective. And this is a concept that's very near and dear to my heart. When we are going digital, when we are going fast, how can we also make sure that our services still remain responsible, and we also use the digital ecosystems in a responsible manner. So that would be one of the questions that I want to raise for all of the panelists. But I also had a couple of more can answer or respond to. One is how to grow, but also in a very responsible manner, taking into consideration the target market we're serving, but also the ecosystem. That's one. How do we ensure data privacy and protection is ensured, particularly of these vulnerable market segments that we're talking about? This is also very important. And like Ndesha has remarked, data is the new collateral. And some people will say data is the new oil. Oil is something that makes the world spin, and data is becoming a significant element in the global economy as well. So how do we make sure that data is protected? How do we ensure privacy of vulnerable clients? Second question that I have. And the third one is, how do financial institutions like MFIs balance digital innovation, operational efficiency, and social impact? Social impact, like I said, is at the heart of the microfinance institutions. If there's any story to be told about the impact of microfinance institutions, it's the significant social impact they're having on the market segment that they're serving. So how do you ensure scalability, sustainability, and also client trust in digital partnership? I know it sounds like a lot of questions, but it would be good to hear your reflections putting all of this together. And I would like to start with Mr. Youssef first.
Thank you. The question itself, it raised another panel. Anyway, we'll summarize it soon. With regard to the scaling, market scaling, as I said earlier, it is a digital convergence. The digital convergence is the main way to scale up. If you partner with telecom operator, you are leveraging the infrastructure built by the telecom. The business where they started can be leveraged. So this is one way. By the way, when we talk about partnership, MFI or banks, they are not new as a partnership. They do different kinds of partnership. But with regard to fintech, it is still slow. One of the strategy, one of the survival for MFIs to reach to their customer, to bring much customer on board is a fintech, partnering with fintech. So scaling always depends at current business. For any business these days, not only for MFIs, scaling is digitizations. So digital transformation is a must to scale. So when it comes to the data privacy and security, as you raised, data is a fuel, yes. Data is a raw material for AI, yes. Data is many things for a company. We do understand. So we need to define a governance for that. Data governance should be one of the agenda in the MFIs. There should be a data governance body in the companies, in the MFIs. Data can be governed very well. So privacy, security, data protection will be maintained accordingly. It should start from the strategy. It should start from if MFI, decide to focus. The main thing is he needs to strategize how he's going to use, how the MFIs can use the data properly. So which means that the data governance should be in place. When data governance is in place, this whole thing is protection, security, privacy will be maintained according to the rules and regulation of the country, as well as it can be implement also international laws. Currently there is different kinds of law, international laws. Also, Ethiopia also adopted some of them. So MFIs, the future strategy, should adopt this law to their strategy and create a policy for data governance. That's the way to do. So from the point you raised, is that so digital convergence is the main agenda for any at this time. It's a survival. It's a survival. They have partnership, different kind of partnership. We can say Amphi is one thing, Ipswich, PSS, with Tenable, with Safaricom. This is a good startup, but it should expand. For any MFI, whether it's existing or new coming, they should do, they should adopt and partner with fintech. That is the journey. That is the survival. I thank you.
Thank you, Ato Yusuf. Sir.
Thank you. For the first question, how can we optimally utilize the digital financial ecosystem is this simple. First, we should have to believe that we don't need to invent the wheel again. So it's better to partner with fintechs, which provide or meet our strategy. So, and as well, as you have seen, as a microfinance or as well a bank, sometimes we are ambitious to develop everything from scratch. In that case, those who are disruptors came to a market and took our customers as well our market. So instead, it's better to partner based on our strategy and value, select the right partner, especially which provide our business. So in that case, currently there are lots of development in public infrastructure, as mentioned by my friend Joseph. In addition, still there is a room to partner with or use this public infrastructure, which help us to boost our business. So that is the best thing to utilize all this. The second question, as MFI, starting increasingly on digital financial technologies, data. In a recent phenomena, which data will be protected? Customer information, a transaction, we should have to select, we should have to clearly mention in our data governance. Because in a recent phenomena, most of the customer information fetched from FIDA. So data already protected there. So what we protect? The transaction, because a transaction will tell us the customer behavior. They are the one we know the customer, those who have or those who know the customer is those who have the data. So the transaction, which shows details about the payment, the borrowing capacity, and other details belong to us. So we should have to keep. We will not share, or if we share, we should have to agree with the partner not to disclose or sell to some other partner. So in our data governance, we should have to clearly mention which data to be shared to others, which data we may access from others. So that can be managed. That can be managed the data breach or others. The other in political thing is how can we digital innovation, operational efficiency, social impact, balance. Balance always important. It is not a simple word. I don't know how, but it is tough for all of us because product sometimes we may be focused to some product. Sometimes we may be pushed by the regulatory to do something. So balance is tough to manage it. But still, while partnering with new company, we are not letting our core values, our mission or vision. Rather, while partnering with any fintech or any company, the partnership should have to support our vision, our values, our culture. So, and again, we are not able to do everything in overnight. Instead, it's better to start from small and grow and catch our customers instead of doing everything overnight. Be curious for, or we may not maintain our basic customers. So this is balance is the important question. May not be easy to answer it, but better to start from small and value the partnership and grow sustainably. The other end, integrated strategy ensures scalability, sustainability, client trust in digital partnership. It is also important. While partnering, it is part of SLA as well our agreement. Is it scalable? Important question. Because while at the stage of feasibility, we should have to look at our partners, especially fintech, how is capability, who supports the technologies, is it local or international vendor? All these are important to define the scalability and others. Because sometimes once we partner, the product may be launched after may not be easily fix the problem, so that may be create discomfort, inconveniences for our customers. So this is important to know our partners' capability and as well able to provide the solution as we expected. The last and the most one immediate step to second priority accelerate innovation, sector linked digital financial ecosystem. It is not belong to only for microfinancial institution because as microfinancial institution, one of the financial service provider uh, in this business, not MFI. Instead, recently instrument shares also getting in market in the ecosystem, and others banks also changing their modalities and using the digital lending which has been provided by MFI before. So what we do, we should have to partner with right technology provider or fintech which solve our inherent problem, which may not able to extend to further to provide our financial service for public. Not only provided so of getting additional resource from the public. So in that case, we should have to select the right partner, which give us a capability and the possibility to reach all this process. Thank you.
Thank you, Professor. Same question.
Okay. I think Tafa's work already positioned his comment as to what I was about to say, which is mainly focusing on what's specifically the value proposition that we are taking to the market, and also selection of the right partner. Why these positions, to my thought, is specifically when designing a product, everything goes in it. Be it how we are going to protect the consumer, how easy and seamless we are going to do the service, how engaging it is going to be, and also how efficiently we are going to provide the service to our clients and how much benefit we are going to get out of it. And this goes and also links to how we are going to balance innovation, operational efficiency, and also social impact. I think the end goal for microfinance institutions, or even per se for every financial institutions operating across the globe, is bringing in that social impact, right? That's the case. One thing that I have experienced a lot in engaging with a lot of organizations is we indulging on mostly on the what's, not the whys. We engage processes and we forget what we are set out to do, and it takes us forever to accomplish what we are looking to deliver in a short period of time. including, for example, if we give out a specification for a technology, which is going to take us 2 years to onboard that technology will be obsolete when we launch it. So that's where innovators, fintechs come in to partner and work with us. They are agile. They can deliver things in a faster way. And it is going to be, I think, in economics, the area of specialization that we are good at. And especially when we look at microfinances or bankers, the main work is going to be around resource mobilization and provision of different type products linked to loan services, if I'm not. So if while there are other minor services, right? Like if we look at the main area where revenue is generated, it is from those activities. And if we look at that, our partnership should look at our end goal, which is social impact. Our partnership should look at how it is going to give us operational efficiency. If we bring in a partner that's going to give us an easy way that clients can, for example, from wherever they are, can use their mobile phone to account or our microfinance institution account. If you give them an easy way that they can walk into a shop that they usually go to get their sugar or bar of soap for a financial service, that's another way that you're keeping the precious time of your branch staffs on the most valued activity that they need to do in their branch office, rather than being crowded with customers that are going to make a deposit or a withdrawal service. And with this in mind, while you are expanding your and balancing your priorities in the implementation, the innovation part comes in, where partnering with innovative tech companies or fintech companies will help you to drive your competition to push out new products every now and then, which is going to build trust and also transparency with clients, thereby your institution and operation. From data perspective, the same thing. You ingrain and embed from the very first structuring of your infrastructure up to the usage. When you think about data, what are the data that you're going to collect? What's the purpose that you will be using it? How we are going to disclose it? And for what purposes that the client is use it, and also how you are going to communicate the client on how you will be using those informations. So those are the major items that we need to look at, and I think everyone can benefit from it. Thank you.
Thank you, Ndeshao, and thank you all the panelists. I think this panel has not been short of any recommendations. And in conclusion, there are a bunch of recommendations that were provided. It starts with, you need to consider going digital. You need to start using data, not collateral. Been working with this microfinance customers for more than 2 decades now. So it's time to start using data for lending. The other recommendation is partnership is the way to go. So don't be afraid to forge partnership with fintech companies and technology companies, but you need to know what you want from that partnership. That's the other message that came out. What is the outcome you need from the partnership is something that needs to be very clear. And then the other point that was raised as a recommendation is also, you need to start small. You need to start small and grow big over time. And I think this sums up the spirit of this panel. And I would have loved to open it up for the audience to ask some questions, but I'm being told I'm out of time. So I would like to thank the panelists, and if you can help me give them a round of applause. I would also like to thank the participants for being such a good audience, and another round of applause for yourselves. Thank you.
And another round of applause for Kumfa Mikhail Yupka for facilitating such a dynamic panel, and the panelists. Thank you for sharing with us your experience and knowledge. Indeed, this is the next generation of microfinances, and we couldn't find better panelists to give us to share with us their insight and knowledge. Great. So for panel discussions, we came to the last one. And trust me, it's going to be another interesting session, contribution of regional and country networks, learning from the good experiences of Africa and Asia. We started local, continental, and global. To moderate that session, please allow me to welcome warmly Makonnen Yallawasan to the podium. Makonnen Yallawasan. Yes, let's put our hands together. Yallowm Wasan. Makonnen Yallowm Wasan. Thank you.
Thank you, Natasha. Thank you, the audience, as well. Well, the panel is on networks, international and national, and it can be regional and also national, like MP. So there are 4 panelists. These panelists, I think, came from Africa, and the other 2, I think, one from Uganda, national, the other one from India. And welcome. I will invite you, I think, to come here and present your panelist discussion. So please allow me, I think, to give them applause to come. Well, let's start, I think, from Annie Carol. She's from Uganda. No.
She's from Africa. She's the Secretary General of Africa. Africa stands for African Rural and Agricultural Credit Association.
Okay, I will give you some 1 minute introduction, I think, to introduce yourself, from where you are and from which institution, I think, you came. Please.
Yeah, I think it's on. My name is Ngubakani Carol. I'm a lawyer by profession, and I'm the Secretary General of the African Rural and Agricultural Credit Association. I joined the office last year. Africa stands for, as I said, African Rural and Agricultural Credit Association. It's a network of active members, 80 members, and including 15 central banks in Africa, microfinance institution, agri banks, development bank, regional banks such as the West African Development Bank that holds together 8 countries, and the Investment Bank of ECOWAS that holds 15 countries. We are housed by the Central Bank of Kenya, and member, actually my office sits at the CBK IMS, which is the Institute of Monetary Studies of the Central Bank of Kenya. I want to pause it there. I think it's 1 minute, and give the floor to Dr. Prasoon, my counterpart from Asia.
Okay,
Thank you.
please.
Yeah, thank you. Good morning to all of you. I'm Prasoon Kumar Das. I work as a Secretary General of Asia Pacific Rural Agricultural Credit Association, based out of Bangkok in Thailand. We work in Asia Pacific, starting from Russia to Pacific Island in Fiji. So we work with similarly with the central banks for our policy area and development for and including the regional multilateral bank like Asian Development Bank. We work closely with the microfinance associations of the countries. So we are there for last 49 years, and fortunately this year is our 50th year and Golden Jubilee year. Thank you.
Okay, good morning, everyone. My name is Jacqueline Babazi. I'm the Executive Director at the Association of Microfinance Institutions of Uganda. It's a national network. We are currently at about 218 members, and our membership cuts across various categories of financial institutions that are within the microfinance sector. And these include banks, deposit and non-deposit taking MFIs, as long as they are targeting the low-income earners. And we have existed for 30 years now, and we work closely with the entire financial services ecosystem in the country.
Thank you, and thank you for inviting me for this conference. And let me first of all compliment the chairman and the Shoma for organizing such a wonderful event. I understand the difficulty of organizing such kind of an event, because we, the Microfinance Association of in India, Southern, has been organizing such programs every year. Every year we have a national conference, and this year it is planned on 7th and 8th of October. And I would like to invite all of you to join us in the conference at New Delhi, India. Introduce myself. I am Gigi Maman. I am CEO of Southern. It's the largest network of microfinance in the country. We started in 1999, and we have already completed 27 years. So we have around 200 plus members with us, which includes non-banking financial companies regulated by the central bank of the country, and also non-NBFC MFIs like NGO MFIs, trust societies, those kind of things. We have banks, we have small finance bank as our members. We also have, along with Mr. Prasoon Kumar Das, that is APRECA, we have also formed an international network of networks. It is called NOMNAR, Network of Microfinance Network in Asia and Pacific region. I would like to add Africa also into that. That would be a good forum to be together. And that NOMNAR is been there for the last year. We would like to expand it. We would like to make it more active and make the microfinance learning, cross-learning much more better. So first of all, I once again thank each one of you, thank organizers, and I'm really happy to be here.
Thank you. Introduction. Well, let us start, I think, with some questions. I try to organize my question into 8 categories. And the first one, learning from Africa, from Asia. And the third, cross-regional learning, rural national networks, innovation and the future outlook, and partnership and sustainability, and closing reflection questions. And I would like to pose, I think, from these two sides are regional, are national. So I will start, I think, from regional, then learning from Africa, then what are the most successful practices for innovation emerging from Africa microfinance networks that others can replicate? And the second one, how have Africa networks contributed to financial inclusion in fragile and rural contexts. And the third can be drawn from Africa experiences in managing risks such as climate shocks and economic instability. Thank you.
Thank you, Mr. Moderator. On the African side, we are, as I said during my short introduction, we are 80 active members and 30 African countries. So we are almost the same age as Prason. So us for next year will be having our golden jubilee. So mostly we are 49 years this year. We have worked with the late Dr. Walde in the past. That was an active member who was actually sitting on the board of Africa as the East African representative sub-regional chairman. So in Africa, we have been trying for 40 or so years to bring the continent together. So what we discovered was that we could not just speak about policies without touching the people at the bottom of the pyramid. Is actually how do we reach the rural farmers down there? So we create a kind of a space where we include the policy side, which is the central bank, where we include the different actors. We have added in our membership the fintech, the agtech. We have been expanding on policies on digitalization across Africa for the last 15 years and 16 years or so. From the development of M-Pesa, we have been one of the key facilitators. We are actually one of the catalysts with another network that is not here, the African network of microfinance institutions. We have been working together in rural Africa with the banks at the policy level. We have started pushing now a policy on cultural risk with financial institutions across Africa. That will be pushed by the African Development Bank. So what is it all about? It's actually looking through the central bank on how the central bank can support the financial institution, encourage them, provide incentive, provide guarantees, provide technical assistance, capacity building. We've started now with the Central Bank of Congo, and then we have some other institutions that are coming. Africa is a very continent. We know it comes with a lot of things. I don't want to go into politics, but I know that it is not managing a network is not an easy task because you have different types of needs. So the needs of a microfinance institution is not the need of an agri bank, it's not the need of a central bank. So we have to cut across all the different needs of the different types of members. So we do that as per the categories. We have a central bank forum that we organize every year that pushes on the policy. Now we are actually also working together with the Reserve Bank of yesterday or the day before yesterday. We spoke a lot on collateral registry. It's actually one of the strategies that we are pushing now across the continent. See how we can deepen financial inclusion, how the unbanked can become part of the banking system. How can we include them, the excluded one? So technically in our rural Africa, we have those who cannot afford to have a loan, not because they don't have a collateral. Of course, they don't have a collateral, but the Reserve Bank of Zimbabwe has put in place a policy, and they are actually supporting through the financial institution from the top there to see how the unbanked at the rural level villages can access loan. So what do they do? You don't need a car for a collateral as long as you have a goat, as long as you have your production, as long as you have something that is of value, a cow, for example, you are able to get into the financial space. So I think those are the few innovations that we do. We do it through policy advocacy, which is one of our pillars, capacity building that we have been doing for the last 49 years, and also knowledge management that we have tried to develop, as well as networking and partnership, one of the reasons why we are here today. So I want to give you back the floor, sir.
Well, thank you, I think, for the explanation. And because I think you challenge with different problems and needs among the institutions that you manage. And at the same time, when you influence the policymakers and the National Bank or the Central Bank, and you impose them, I think, to issue, which is moderate, I think, to issue directives or other tools that will govern, I think, moderately the financial industry. So you think exceptional role, as you said, among member institution. But the difficult is what I feel, the diverse problem of the institution, and how could you balance, I think, from the competition aspect, the business secret aspect, and at the same time, the challenges that they face. So you'll pause, I think, maybe on the second round. Mm-hmm. So what I come now, learning from Asia, as we heard, I think, made remarkable progress in scaling inclusive finance. What are the key drivers, I think, behind the success of the Asian network? How have Asia network leveraged digital finance and fintech to reach the unbanked? What institutional or policy framework in Asia have enabled strong collaboration among MFI and networks? Please.
Thank you. Thank you for this question. I think the regional diversity is almost similar in Asia as well. We start with the West Asia, Central Asia, South Asia, Southeast Asia, and East Asia. And they are completely different in their approach, including their financial stability. However, asked the question of the drivers, I want to put it into 4 categories of drivers. The one, as you said rightly, that we have a robust digital public infrastructure. In some of the countries, for example, if you go to India, you go to China, go to Thailand, you have Singapore, all those countries have a robust structure which help them to leapfrog the financial inclusion. And if you see 20 years back, the financial inclusion in Asia as a whole used to be less than 40%. Now, in the last Findex data, which is done by the World Bank, Asia is almost nearing Europe in terms of financial inclusion. And thanks to India, because India being the largest country in terms of population, 1.4 billion, and almost 78% of the population are financially included, which has changed the entire matrix of financial inclusion in India. The second driver will be the regional regulatory convergence, which is extremely important because we know, that we have sub-regional, similar like Africa. We do have regional as well as sub-regional networks. Like we have SAARC for the South Asia, we have ASEAN for the Southeast Asia. So all those, they develop the regional payment connectivity, which is extremely important. If you go to even if you see India, the UPI, the payment system, is now available in 16 countries. And they process around 20 billion transactions in a month. Just imagine the volume. So this is one of the drivers. The third driver, I think, will be the integrated finance plus partnership. It's not the finance, it is finance plus. And where we have, many multilateral banks in Asia. For example, we have the oldest multilateral is ADB, Asian Development Bank, but at the same time, we do have AIIB, which is Asian Infrastructure Investment Bank. We do have New Development Bank, which basically used to be BRICS Bank. So these three multilateral banks are in Asia, which has given us more leveraging. The fourth driver is our specialized climate mandate, climate inclusive mandate. Most of the Asian countries have developed the taxonomy, which is one of the major drivers for our climate finance and sustainable finance. I think these are the four drivers we can discuss further. Regarding your question on the policy, as you said rightly, that what we do in APRACA, we are the brokers. Basically, we support the policies, we design the policies, sometimes we design the voluntary guidelines, which may or may not be taken by the countries, but we develop the, if you go to websites of FAO, IFAD, you can see the guidelines developed by a jointly by APRACA and IFAD. For example, guideline for report mechanism. Last year, we did a very marvelous work on the policy. It is a reporting system. Most of the microfinance institutions and the banks sitting here, they are doing wonderful jobs, but their jobs, their contribution to the sustainable finance or sustainable development are not being recorded. Because our reporting system don't allow us to do so. So how to design a reporting system where even a small cooperative's contribution can be recorded and that their contribution can be given the reward. So that we have developed last year, which is extremely important. You can go to our website, even in the FAO website, you will get that. Then we did a standard setting, which sometimes volunteer, sometimes it is through our central banking system, because all of the members are central banks. Then policy research and technical advisory. We develop policy, we design policy, keeping in view we are not developing on ourselves, but based on the best practices in other countries, including Africa. So we do that, we collect all those and provide it to the other members. And finally, implementation of multi-country policy projects. Not projects, it's a policy project. So everybody implement project, but we implement policy project. So these are the four areas of our intervention in policy. Thank you.
Thank you very much, I think, for excellent explanation and touching, I think, all the pointers what I have raised. But I do have one very important question. In your country, I think NABARD and the central bank sometimes subcontract, your network, maybe APRACA, to do self-regulations. among microfinance institutions or bankers, they try to self-regulate, and you will put it, I think, not now, but next round.
I think it is GG who do the self-regulatory.
Okay.
They are the self-regulatory agency.
Take it as additional question. And for the national network, what role national networks, I think, for microfinance play translating regional global knowledge into local market? And the second one, how can the national network strengthen member capacity innovation and policy advocacy? And the third one, what are the key challenges faced by the national network and how can they be addressed? The same question for both. Yeah.
Okay. I think I'll speak basing on the experiences we have at AMFIU as a national network. Well, first of all, national networks, they give credibility and relevance and knowledge of the sector. If I give the experience of how our association began 30 years ago, is because the central bank in Uganda actually issued a press release saying that for them, they don't understand what microfinance is. And they were actually warning the public that you deal with the microfinance institutions at your own risk. And that is how the whole network began to build up, come together, because no one was understanding that kind of financing to the rural and low-income people. And some people thought they were just like Ponzi schemes. And so when the network came together, that is when the whole nation began to understand what microfinance is truly about and its contribution to the national development and not just individual customers that we are dealing with. And that is when we brought regulators, we brought together government, we brought together the entire ecosystem to educate them on what we are doing. And from that time on, actually microfinance is a center stage for anything that government is doing. If you look at the national development plans of the country, financial inclusion will always highlight the role that microfinance has to play. Government has established a whole financial services department with a minister in charge of microfinance to deal with microfinance issues. And that is just because the network came together to actually educate the entire country about what role we play. And we are covering a very key gap. And as the association, one of the major things that we do to ensure the global presence is that our members report to us on a quarterly basis on their contribution. You know, at first, the contribution of microfinance was being because we were not showing, I think it's Dr. Kumar who talked about it, because we're not showing what we are doing. And so because we needed to show our relevance, we came together and designed a reporting platform that not only reports about the financial contribution of the sector, but also the social aspects and the environmental aspects that relate to empowering customers, that relate to consumer protection, that relate to social impact. And that is able to demonstrate our contribution. In fact, when they started receiving these figures and the sector was contributing trillions of money that is going to a group of a segment of the population, not have the opportunities that the high-end people had, able to recognize us, and for any policy-related aspects that government wants to put it that is related to financial inclusion, the association is always first on the list to be invited to deliberate upon this. We are always called to Parliament to go and help government design laws and regulations and policies that relate to financial inclusion. At AMFI, we sit on the Interinstitutional Committee of the National Financial Inclusion Strategy. And because of that, we are able to put in place the role that the sector actually plays in terms of financial. And the other thing that we do basically is to its technology, whether it's credit, whether it is savings, that all these services and products are designed in line with the lifestyle of the customer that we are dealing with as a sector. I'll just give an example. Recently, we were approached by a fintech company that had a solution for eKYC. And we were very excited about it because it meant that this tedious process of the customers going to open accounts and there are this whole list of KYC requirements that they need to fill would the solution was actually trying to relieve that, and of course ensuring that more people are reached using this technology. But when we looked at that this technology company was providing, we wondered if they are actually targeting the typical MFI. And metrics like, okay, you're filling in for validation, attach your utility bill. And we're like, utility bill? Which utility bill? A typical microfinance customer is basically harvesting water, from the rain or fetching from the well. They don't have. They are using solar. They don't have any of those things. So you put that as a mandatory field, and you've basically created a barrier for the microfinance customer to access the services. So those are things that we shape how some of these policies come in place and ensure that they are targeting the microfinance customer that will benefit from them, and not just to create of technology. So you asked recently what we are, and one of the things we are looking at is that when we are building capacities of our members to be professional, we do a lot of training and etc. But you must also build the capacities of the customer, because the customer must also be attractive to the financial institution. So, and this helps to stimulate demand also for our members. I remember at a certain point, our members, we were encouraging them to digitize, and many of them came and said, well, we've put forward these platforms, but the people don't want to use them. The customers don't want to use them. And so we carried out a study and found out the reasons why they were not using them. And we worked out a strategy on digital literacy to ensure that the customers understand and create this trust between the financial institutions and themselves. And we have seen this more than quadruple the number of customers that are actually now using technology and all the opportunities that come with that. So in terms of challenges, as we know, the donor landscape has changed. Most associations are heavily dependent on donor support. And this is an aspect that has totally changed within the last few years. We've experienced that also. USAID was funding a very big part of our budget, so you can imagine a shutdown within a short period of time and how that affects the operations of the association. So we have established a commercial wing that actually deals with building capacities and research and all that is able to generate resources that funds the activities of the association, and also design our membership strategy to ensure that the members can actually support the association to do its work in a more involved way. Yeah, I think in the meantime, I'll stop there and let my colleague continue.
Thank you. Please proceed.
Yeah. So as I said earlier, Sadhan is the largest and the first association in microfinance we have in the country. So as an association, we have a role of policy advocacy, capacity building, developing the sector, developing the member institutions. So that is one part of our major role as an association. I'm sure most of the networks are doing that. But another area which we have been interested with is the self-regulatory role, which the moderator just mentioned about that. We are one of the, I think, only country I would say where the regulation has been decentralized. In fact, as you, central bank is the regulator for microfinance institutions, but then because of the large number of microfinance institutions in the country, and also the various sizes, different varying sizes of the institutions, it may not be always prudent for the regulator to do a regulation of these institutions very thoroughly. So that is the reason why they created a concept called self-regulatory organization, SRO. So we are a self-regulatory organization with the Reserve Bank of India, for microfinance, recognized by the central bank, that is the Reserve Bank of India, for the last 11 years. As a SRO, it's a two different nature. If you see, one association is basically building the sector, developing the sector, capacity building them. But as an SRO, we are keeping a watch on the institutions, like something like a regulatory role, quasi-regulatory role, where something like a watchdog. So this is two different areas, but still we are able to do it very well. That's the reason now, after 11 years, we have been working so successfully. Now, recently, for the last 2 years, the central bank has also extended this self-regulatory role to other financial segments like fintechs, recently for the payment companies, then also for BC companies. So like that, different segments are being now given the self-regulatory role to their association, recognized association. So as an SRO, self-regulatory organization, we have to keep a watch on the members. We have already laid down a code of conduct. Code of conduct basically to protect the interests of the clients. So it's a client protection and ensure responsible lending. So there is a code of conduct which lays down what are the things to be done, what should not be done, all those things. We keep a watch on that, and we keep reporting to the regulator on a regular basis, on a structured way. Regulator is in know of things, and wherever there is a need, they also come into the picture. Again, we also, as an SRO, take up some of the issues, some of the policy level issues, and we become a consultant for the regulator. Whenever they go for a new policy, they consult us, they also share with us, and we also give the inputs so that it becomes much more democratic and more useful for the members. So this is a concept of self-regulation which we do. Recently, for your information, we in microfinance in India always have some ups and downs. There will be something which comes which can affect the sector for some time. For example, COVID was one of the major, which all of the entire globe was affected by them. Before that, we had something called demonetization of large currencies. That is all 1,000 rupees and 500 rupees notes were withdrawn, and fresh notes were issued by the bank. So in this process, there was a huge chaos, especially the liquidity position in the country became very difficult. And that was a time when microfinance also affected. And for information, whenever there is a crisis, whenever there is a chaos, it also helped the sector to grow better. For example, I'll tell you, in 2010, we had a first major crisis, I would say, one particular province called Andhra Pradesh, where the state government came up with a regulation putting some restriction on the activities of microfinance institutions because of certain reasons. So as an association, we took up the matter with the central government, with the state government, with the regulator. And as a result of that, the credit bureau mechanism was developed in the country. So now, for your information, you must be knowing that we have 4 major credit bureaus in the country. That is CIBIL, TransUnion to CIBIL, then Experian, then there's Highmark, and also Equifax. All 4 are operating, but the first one started in 2011, I would say, 11 or 12. That was a kind of a fallout of what crisis we underwent through that state provincial restrictive regulation. Then after the demonetization came, we moved into the digital mode of payments. Till then, it was all cash. It was all cash was being was being dispersed. Cash was being collected. So that was being the major issue. When demonetization happened, currencies were withdrawn. There was no money to transact. So that was a chaos. So then MFIs moved into the digital mode of payment. So now entire loan disbursement takes place digitally. And then when COVID came in 2020, then there was a problem of again meeting people, collecting the money. So it moved into the digital form of collections. What I was trying to say is that different crises have been happening, and that is also an opportunity for the microfinance system to move into a better opportunity and strengthen themselves. Now, recently what happened was that after the COVID was over, there was a sudden demand for the money. There was a sudden need for the MFIs also to supply the money. It caused some kind of a over leverage of funding, and that also caused some kind of a stress in the repayment. So as an SRO, what we did was that we lay down, in addition to the code of conduct we lay down certain guardrails, restricting, putting some kind of a restrictions, what should be the loan amount to be given to a household, how many loans can be issued, how many institution can finance them. So those kind of a constructive regulatory structure is what the SRO is doing. I'll stop here. I think I already seen MC moving around, so I stop here. Thank you.
Well, the time is running. Okay, we will go to the second round of questions. I will go, I think, for regional. The cross-regional learning. What are the top 3 lessons Africa can learn from Asia, and Asia vice versa? How can regional networks facilitate structured knowledge? So, but very important items to remain. Well, the time is running. It's because of maybe the organizational arrangement. Anyway, now we are going. I think no way. I think the solution, we cannot find other solutions than finalizing. Okay, regional and country networks are just a platform, as you know. This platform is created to challenge the challenge among the institutions. These are, I think, the technology aspect, the challenge will come, and at the same time, the policy issue, the product development issue, the customer service issue. So we try to challenge together all the institution organized in one umbrella, and then help and support each other. But the most important aspect is the sustainability and innovations. Innovations, I think, by using technologies, especially the fintech. We say, even in our opening, there are 3 new generation. The new generation customer, client, and the new generation technology, and the new generation institutions. And I personally add the new generation networks also. Because in order to serve the institution, the new generation institution, there must be new generation networks. So these are, I think, the point that you have to take. And at the same time, the sustainability issue. All the AFRACA and the national networks said they seek funds from World Bank, multilateral organization. But if you are not dependent enough, you will not be sustainable in a true way. So that AFRACA and also the Ethiopian Association, Microfinance Association, MFI, we should be independent. Whether we get fund from USAID, whether we get fund from World Bank, we have to create income generation, schemes we have to develop. Otherwise, the sustainability is very difficult. You'll never be independent, and for long, you will be a facilitator of the World Bank, facilitator of USAID. So you have to be facilitator of the institution, the members institution. So this is the fight that I said. So I think the panelists, only the time problem. Otherwise, please.
I just want to add one point to what you said, moderator, regarding the sustainability of the networks. In India, if you ask us, Sadhan, we are only, also membership fees are there. Only 25% of our expenditure is covered by the membership fee, and the remaining 75% comes through the various projects and programs we take up.
Yeah.
Thank you. Thank you very much, the moderator, Mr. Makonene Lomwesan, and the panelists. I know this is the one comment we've been getting since day one time. So we promise to improve it next time. For the next conference, we'll give ample time for presenters for the panel discussions, and also we'll have time for Q&A because people would want to have follow-up questions. We really apologize for that. So with this, we'll go for a coffee, tea, and health break, and we'll be back at 11:30. And when we're back, we'll have MOU signed, and also we'll have the closing ceremony. So we'll see you back in this room at 11:30. And make sure that to visit the booth downstairs one more time. If there is any organization you haven't checked out, this is your last opportunity, and make use of it. Thank you. Welcome back. Welcome back, ladies and gentlemen. Let's start the last session of our conference. So this last session of the International Conference on Next Generation Microfinance will be a presentation followed by a signing of a memorandum of understanding. So I will now invite Christoph Pausch from European Microfinance Platform to give us the presentation and then to sign the MOU. So please put your hands together for Christoph Pausch. Welcome. Guten Morgen. All right.
So, Salam. Thank you very much for inviting us. And as we are already going towards the end of this conference, maybe I could congratulate and thank our organizers, AMFI, and the partners, IFAD and the European Union for this perfect organization, for this great conference. And I invite everybody to join me in a round of applause in congratulation to the organizers. So my name is Christoph Pausch, and I'm the Executive Secretary of the European Microfinance Platform.
just a few words about the European Microfinance Platform. It was founded 20 years ago, so we are celebrating at the end of this year our 20th birthday, so a little bit younger than some of the networks we saw just previously. And we were founded because European actors working in microfinance in the global south came together, and they had feeling that everybody was a little bit working in his or her corner. They were not talking to each other enough. And so they decided we should have a big conference to come together, and we should found a platform to find synergies, to network, to cooperate, to have better results in the field. We are a multi-stakeholder platform, which means that we have development agencies in our membership like AfD, GIZ, FMO. We have the EIB as one of the founding members, the European Investment Bank. We have some UN organizations as members like ILO, UNCDF, and the World Food Programme. We have raters, NGOs, consultants, and I think one member is even here from AFC. We have fintechs, banks, fund managers, and CGAP is also a member. So you see a very diverse membership, and what brings them together, working together, cooperating, finding synergies. And we started with 20 members at the beginning, and we are now at around 120, and our secretariat is in Luxembourg. Our main activities are once a year annual conference. It was formerly known as European Microfinance Week. Now it is known as IF, Inclusive Finance, which is held next November, 11th to the 13th of November in Luxembourg, and which brings together around 500 people from our sector. We have working groups, we make publications, and we have an award which was previously known as European Microfinance Award. And is now known as Luxembourg Award for Inclusive Finance. It's an international award recognizing initiatives, innovative financial inclusion initiatives. It was launched in 2006, so it's also the 20th anniversary by the government of Luxembourg. It's organized by my organization, EMFP, European Microfinance Platform, and Infine, which is the Inclusive Finance Network Luxembourg. And it highlights innovative practices that can be replicated globally. We changed, this year, at our 20th anniversary, we changed the name from European Microfinance Award to Luxembourg Award for Inclusive Finance to become and I will show you a short film to explain this a little bit better. So thank you very much. And the award is each year on a specific on different topics. So you'll see here a list of the past editions themes. And there are two in 2008, for example, socially responsible microfinance, 2010, value chain finance, and then you see the different topics. In 14, microfinance and the environment, which was at that time, I would say, still quite niche as a topic, whereas today it's really a much bigger and more important topic. We had microfinance for housing, financial inclusion through technology, financial inclusion that works for women, and then in 20, advancing financial inclusion for refugees and forcibly displaced people, and last year, microinsurance as a topic. So what is the topic of 2026? The topic is unlocking youth inclusive finance. So I think really a topic, I think at the right place. I learned that 70% of the population of Ethiopia are below 30 years old. So I think I'm sure many of your organizations have programs which would be eligible for this year's prize. So there are some examples. Could be initiatives, so saving for education, for example, starting businesses, managing irregular income, coping with economic shocks. Next question, what does it mean, youth? So you can see it here. The award focuses really on to 30, so late adolescents, young adults, emerging adults. So from education to starting or creating a business, a small business, starting maybe family, or creating a house. So there are really many possibilities. And what is the award looking for? So it should combine financial services such as savings, credit for education, enterprises, and these are just examples. So there are many hundred other possibilities with non-financial services, such as financial literacy, entrepreneurship skills, mentoring, coaching. So who can apply? So financial service providers, microfinance institutions, banks, NGOs, organizations facilitating access to finance. They should, unfortunately not immediate startups, but they should have at least 2 years of, they should come from one of the eligible countries, but all African countries are eligible, and they should have at least some audited financial statements already. And why should you apply? So you see in box 3, I would say a good reason. So there's 100,000 euros for the winner, 10,000 for the finalists, but it's much more than this, because it is really an important visibility within the sector. We are making a lot of programs around it. We are making press releases, publications, webinars. We are inviting people, and this is also linked to connect with leaders in the inclusive finance, because the finalists are invited to Luxembourg to the ceremony, but also to our big conference, so they can network, they can have good contacts with industry leaders from the north. The application process, so we currently are we just last week started the application process, and what is very good, that is a quite simple application at the beginning in round 1. So it's just overview of the institution. You describe your initiative and you attach the audited financial statements. And then there is a first pre-selection committee which looks at all the applications, and only if the pre-selection committee feels that this is really something that could go for the award, then you will be invited to the, which then needs, of course, more supporting documentation and to present more details. But it's really a quite easy thing. And what is very important, the deadline, it's the 12th of April. So here, the just started last week. Then 12th of April is the deadline for applications. Then we have the review of round 1, as I said, a quite simple application, and only if there is the feeling that this application could be really something for the semi-final or for the final, then you will be invited to the second round. Then it's in the first half of May, the invitation to the second round. And then in September, there is a selection committee, which is built by industry specialists and leaders. So it's also a very good visibility for the applications and for the organizations, because they are representatives of European organizations discussing the applications, and then also maybe then getting interested in the applications. And then they decide on around 10, and among them the 3 finalists. And the 3 finalists are then go then to a high jury. They're invited to Luxembourg. Then there is a high jury meeting on the 12th of November, which is just before the ceremony. And the high jury in the past was always chaired by the Grand Duchess of Luxembourg. So it's extremely high. The other participants were the EIB president or vice president of the European Investment Bank, the Minister of Development Cooperation of Luxembourg. We always had some other high-level people there. In one year, Professor Mohamed Yunus, for example. So it's really an jury, and this jury decides then who should be the winner. And now you might think, okay, this is very dry, very far away, but history shows that some fellow colleagues of you have already succeeded. And I'm going back in history, and 2008 was the topic of socially responsible microfinance. And I'm very happy that the winner is even with us, Ato Deshome. So congratulations again. And you can see, I think I selected the images because I think they give a good impression about joy, and you also see the venue. The ceremony is at the European Investment Bank, a really very prestigious environment. And then is not stopping here, because in 2010, value chain finance, Harbour Microfinance. And in 2020, again, Busa Gunofa, unfortunately, they didn't win, but they were once again a finalist. And this is a very special picture because it was during COVID. So there was no in-person ceremony, unfortunately. So these are it was online. So you see the Grand Duchess of Luxembourg announcing the winner, and you see the 3 finalists, and on the right top, you see Ato Deshome. So once again, congratulations. And this is now Ethiopia, but there are people from Rwanda, for example, and Rwanda 2 years ago, Rufi from Rwanda, Uganda won the award, and last year Yaku from Rwanda won the award on microinsurance. So it's not impossible. I think I hope I could give you an idea. I could give you a little bit of a taste of this. And here you see the QR codes and the online, the internet address. So it's inclusivefinanceaward.lu, LU for Luxembourg. So if you have any questions, don't hesitate. There is also an email address. And we are also making guidance sessions, sort of webinar where people can ask questions in English and Spanish. It was yesterday and today in French, but they will be also on the website so that you can go through the application process. So I hope that this is of interest for many of you. I think it's really worthwhile to do it. And I hope to see many applications from Ethiopia, from Rwanda, from Uganda, from Ghana, from many countries of Africa, and maybe we will even see each other in November in Luxembourg. So thank you very much.
Thank you very much, Christophe, for that great presentation. And yes, I second your what you said. We really need to see you there. So start writing your pitches, your applications, and if you need some aurotwad there, I got you. Oh, it makes sense only in Amharic. So, okay, now it's time to sign a memorandum of understanding between the European Microfinance Platform and the Association of Ethiopian Microfinance Institutions. So please help me in welcoming Ato Tashome Kabeda, the Executive Director, to sign the memorandum of understanding with Christoph Pasch. Okay. Oh, sure. All right, so there's sign of understanding because this platform is all about partnership. Put your hands together, ladies and gentlemen. So as Christoph said, I know many of you have been doing a great job. You're working hard. So we want to see you acknowledged at the end of this year at the platform award ceremony. And that was great. So the memorandum of understanding has been signed between the European Microfinance Platform and AMFI, the Association of Ethiopian Microfinance Institution. All right, thank you so much. So let's send Christoph back to his seat. And while you're here, Ato Tashome, please give us a closing remark.
Ladies and gentlemen, good morning again. I think 2 days before, I was here to say you welcome. But now the time has come. Thank you and goodbye. So to say this, I have to distinguished guests of honor, honorable guests, esteemed delegates, ladies and gentlemen. It's both a privilege and a great honor to stand in front of you at the closing of this remarkable international conference organized by the Association of Ethiopian Microfinance Institutions under the theme Next Generation Microfinance, Unlocking Opportunities through Innovation, Inclusion, and Resilient Financial Services. Over the past days, we have engaged in rich and insightful discussions, shared experiences across regions, and explored innovative pathways to advance inclusive finance. The depth of dialogue and the diversity of perspectives demonstrated here reaffirm one important truth, that is, financial inclusion is not just a development agenda, it is a transformative force for economic empowerment and social equity. We have heard inspiring contributions from policymakers, practitioners, development partners, and
from Africa and beyond. The lessons shared on digital transformation, innovative financing mechanisms, resilience building, and inclusive outreach to underserved communities, including women, youth, refugees, and persons with disabilities, have been both timely and impactful. As MP, representing 62 microfinance institutions in Ethiopia, we are encouraged by the collective commitments demonstrated here. This conference has strengthened our resolve to continue building the capacity of our member institutions, fostering collaborations, and advocating for an enabling environment that supports sustainable and inclusive financial system. Let me take this opportunity to extend my deepest gratitude to MFIs staff. Our MFI staff here, can you stand up once, please? Unfortunately, they are busy. Other assignment, and I can't see them here. I would like to thank them for the relentless effort they have made to make this conference a success. Again, I also like to thank my board for the close support and the direction and the guidance to make this international conference a success. Can we stand up, please? I want to thank you in front of this gathering. Thank you very much. To our partners, particularly EU, IFAD, and for our sponsors for their unwavering support. To the event organizer, Flawless, and to ECA, Economic Commission for Africa, for giving us this service. Again, to our Master of Ceremony, Manti, thank you very much. To our distinguished speakers and the panelists for sharing their knowledge and expertise, and to all participants whose active engagement made this conference truly meaningful. Ladies and gentlemen, as we conclude, let us remember that the real work begins now. The ideas and the commitments we have generated here must translate into concrete action. Let us carry forward the spirit of collaboration, innovation, and inclusive in our respective institutions and the countries. Distinguished guest of honor. It is now my great honor and a privilege to invite you to deliver your closing remarks and officially declare this international conference is closed. Thank you very much.
Thank you, Ato Shoma. Good afternoon, all. Distinguished guests, esteemed delegates, ladies and gentlemen. It was an honor and privilege to deliver these closing remarks at the conclusion of this insightful and impactful international conference on next generation microfinance. Over the past few days, you all have engaged in rich, forward-looking discussions on one of the most important agendas of our time, advancing financial inclusion through innovation, strengthening silence, and unlocking opportunities for all segments of society. I would like to sincerely commend the Association of Ethiopian Microfinance Institutions for successful convening this important platform and for bringing together policymakers, practitioners, development partners, and all leaders from of the world. Throughout the conference, several important themes have clearly emerged. First, we have seen how digital financial services, fintech solutions, and data-driven innovations are transforming the financial landscape by expanding outreach, reducing costs, and improving efficiency. Second, our discussions have reaffirmed a shared commitment to ensuring that financial services reach the underserved, particularly women, youth, rural communities, refugees, and persons with disabilities. Third, in the face of global uncertainties, including economic shocks, climate risks, and technological disruptions, the need for licensed financial systems has never been more urgent. Finally, a recurring message across this conference has been the importance of collaboration, strong partnership among regulators, financial institutions, fintechs, and development partners are essential to build more robust, inclusive, and sustainable financial ecosystem. As the central bank, the National Bank of Ethiopia remains firmly committed to promote financial stability and integrity, advancing financial inclusion through enable policies and regulatory frameworks, supporting digital transformation and innovation, financial services, and strengthening the microfinance and banking sectors to better serve the economy. We recognize the vital role played by microfinance institutions in Ethiopia's financial inclusion journey. Their close connection to communities and deep understanding of local realities makes them indispensable partners in achieving inclusive and sustainable growth. As we conclude this conference, let us move beyond dialogue to action. Let us translate ideas into practical solutions. Let us scale an innovations that works. Let us strengthen collaboration across borders and sectors. And above all, let us ensure that no one is left behind in the financial system. The outcomes of this conference should not remain within these walls. They should inspire tangible change in our policies, our institutions, and our communities. I would like to extend my sincere appreciation to the organizers and the Association of Ethiopian Microfinance Institutions, and I said congratulations to all speakers, panelists, and moderators for their valuable contributions, to our development partners and sponsors for their continued support, and to all participants here for your active engagement and commitment throughout this conference. With these remarks, I hereby declare this international conference officially closed, but not closed. The network is open. Thank you.
Thank you very much, Mrs. Marta Hailemariam, advisor to the Vice Governor of the National Bank of Ethiopia. Thank you very much for honoring us with your presence. I'm here only to give some announcements. Yesterday, I told you there will be one more thing left. There will be a surprise. That surprise is we will have dinner together tonight. We just cannot let you go without having something to celebrate with. So we'll have dinner and at Yod Abyssinia restaurant near Tedros Adababai on Churchill Road. So the guests, the shuttles, will take you there. For our Ethiopian colleagues, let's meet at 6 p.m. at Yod Abyssinia on Tedros Adababai. 6 p.m. And for our guests coming from outside of Ethiopia, we want you also to have a great time visiting our city. So there will be a sightseeing arranged for you. So at 2 p.m., please wait at the lobby of your hotels and shuttles will come and they will take you to a sightseeing. And at 6 p.m., we'll meet for dinner at Yoda Abyssinia. So with this, we come to the end of the session. 3 days, 16 sessions, in addition to the opening, the closing, and the MOU signing. More than 50 speakers coming from more than 10 countries later, we come to the end of the international conference on next generation microfinance, unlocking opportunities through innovation, inclusion, and resilient financial services, here at the UN ECA Conference Center in Addis Ababa, Ethiopia, that took place from 24th to 26th March 2026. It's been a pleasure, an honor to be your master of ceremonies throughout the 3 days. I hope you didn't get tired of me. Well, if you haven't, then we'll meet at lunch and I'll make sure that you'll get tired of me. But it's been a pleasure. Thank you so much. I hope I'll see you very soon. For those of you in Ethiopia, I'm sure you'll see me soon. And for those of you outside of Ethiopia, I hope we'll meet somewhere in the world very soon. Have a lovely very much. Merci beaucoup. Asante sana. And have a lovely trip for those of you going back home. Good day.
Thank you.